Yep.
Hi everybody, we are group number 9. We are here to present a presentation on ocean project tax allocation for G20 countries. We are 4 members, me, Harman, Uday, Gurpreet and Saraswati. I'll start with some basic introduction that what this project is. We have developed a lookup table that helps to know how taxation system is applied in ocean projects. The project is very limited to G20 countries, and we have used arm's length and formulary apportionment based on taxation system, and even we have known to get impacts on transfer pricing of ocean projects. As everybody know, there are some problems when we are doing any of the project, as this project also have some problems. When we think of doing any project in the ocean, that project is very risky and everybody doesn't go with that risk. Investors want their money to be saved, so they don't take that much risk. I hope this project helps everybody to know that how this taxation system help, or how they avoid the double taxation system. Moreover, this helps to know that how the IT technology and engineer are doing the best. I would like to hand over next part to Gurpreet.
Thanks, Arman, to introduce us about Ocean Project. So now I would like to start with data collection. As everybody know, for any research or projects, we need to gather some accurate information. So for this project, we had two options. One is primary data collection and second one is secondary data collection. Out of these two, we choose secondary data because to get the primary data, we can't get any opportunity, because to get the primary information, we need to do surveys, interview, and ask for the feedback of the customers, which is very challenging task in this COVID days. So to collect data, we use secondary data. So for this, we use official websites of some countries. Like we are limited to the G20 countries. We use the information from G20 countries only. If, like for example, if we need to get the information about Australia, we use ATO website, which provides the accurate information about their taxation system. And we also use some journal articles and textbooks from internet sources. So let's talk about the ocean project now. As you can guess from the name, like ocean projects are those which happening in the oceans of the different countries. Like every country has their different oceans. So if a company from another country wants to do their project, like any project like technology, construction, and energy, they have to look at the taxation system of that particular country. So there are many different ocean projects like sea waves, electricity, ocean energy, fishery. And there are three different types of ocean zones. First one is territorial sea. Second one is economic exclusive zone. And the third one is international waters, which is known as high sea as well. So now I would like to call Saraswati so she can proceed with the further slide.
Thank you, Gurpreet, for your information on the methods and the ocean zones. To continue with that, the first one is territorial sea. It is a zone which does not exceed beyond 12 nautical miles from the baseline of the coastal state. A coastal state has right to seabed, subsoil, and vertical to airspace. Uh, coastal state also has a right to take all the legal decision related to these zones. Therefore, if any ocean project is planning to operate in this zone, then tax application will be applied by the coastal state. The next, we have exclusive economic zone. Exclusive economic zone is beyond territorial zone and up to 200 nautical miles from coastal baseline. It has right to exploit, explore, manage, and consume all the resources belonging to this zone. Along with that, it also generates electricity, wind, current, as well as do the fishing in this zone. Like territorial sea, tax is applied by the coastal state if any ocean project is planning to operate in these zones. The third one is international water, which is also known as high seas, which is beyond territorial sea and exclusive economic zone. Tax is free in this zone, so anyone can explore international water with their project without any tax application. So to continue with the presentation, I like to hand over to Uday. Thank you.
Uday, you are muted, brother.
Thank you, Saraswati, for your wonderful explanation about ocean zones. Now, I would like to proceed with the transfer pricing, which refers to the rules or method for the international pricing transaction between enterprise, which is used by the G20 countries in this ocean project. Basically, when two companies are part of the same group trade with each other, they need to establish a price for that transaction. That amount is the transfer price. For example, an Australian-based enterprise buys something from China-based enterprise. The price Australia pays for its purchase is a transfer price. Thus, transfer pricing is an accounting practice where the multinational companies set prices for their related party through international transaction. Uh, we have like some images below. Uh, in the first image, which shows the pricing between the independent and dependent parties, where independent parties include the market forces and dependent parties does not include any market forces. Likewise, the second figure here shows multinational companies sharing transfer price information like revenues, income tax, capital, tangible assets, etc., etc., through country by country report for tax purpose to the tax authorities, where the subsidiary requires to submit the master and local files for the tax authorities. Further, transfer pricing includes two major principles, that is arm's length principle and formulary principle, dealing the tax purpose, where the arm's length principle refers to the transaction when two unrelated parties trade with each other and decide on a market price for the goods sold. It is a separate entity approach and focus only on the nature of the transaction. The principle helps to enable an adequate distribution of the profit taxation rights between countries and allow the elimination of the double taxation through the application of the tax treaty. It also helps to protect companies from the tax sanction. This approach is a much closer approximation of the debt the corporation could borrow at arm's length and thus removes unbalanced treatment between companies that are members of the multinational enterprises and those that are not. Likewise, another major principle of the transfer pricing is formulary apportionment, which allocate the profit earned by the corporation to the particular tax jurisdiction in which the corporation has a taxable presence. This approach helps to reduce the complexity of the tax system. Also, it helps to improve the perceived fairness and transparency. This approach is far more difficult to manipulate the tax purpose as it led to the double taxation issue for the income of the multinational corporation. Usually there is conflict with the international accepted method, therefore there is difficult in obtaining international agreement. Lastly, formulary more reliance on the auditing firms. That's why, in my opinion, arm's length principle is far better than the formulary apportionment. That's all. Maybe. Thank you. Now I would like to call Harmanpreet to proceed outcomes of these ASIN projects.
Thank you, Uday, for telling us the main parts of our project. I'll be proceeding with the outcomes. For this, we created a lookup table for all G20 countries that helps the investors to invest that how the taxation system works and how they can know the exact taxation, that if they are in another country to deal with Australia or some other country, so then they can know what are the taxes there. And we have maintained a wireframes for the company that helps everybody to know about the company as well. Moreover, there were some web scenarios for web users that helps accountants to get the way that how the taxes are worked and how they can manage that stuff. Moreover, online information for taxation was done for the Digitech company that helps them to make it on their own website. So I'll be showing you the lookup table that we have maintained. This comes with some of the countries. There are some countries like France. So we can, from this lookup table, we'll easily know that what are the subnational taxes, what are the tax base that country uses, and which taxation methods, arm's length or formulary they are using for getting in touch with other countries through ocean, and what are the tax rates, and even the transfer pricing rule is also clear from this chart. Moreover, we are able to know that how this system works in other countries. The comparison for this is also easy. So I would like to end up this one with some references. Here are some references we have used as we were not able to use primary data for our data collection. Thank you. If anybody have some questions, please let us know.